Accounting reconciliations are an important part of the justification for financial tracking, analysis, and reporting. They are used to ensure that the records of more than one account agree with each other within the same business entity, or that the record of one account agrees with the record of a third party, such as a bank reconciliation or an external auditing firm. Every reconciliation must include an initial review, a comparison of the records on both sides, and resolution of any discrepancies. Although this process can be quite complex, depending on the scope of the financial records and the depth of the review, all accounting reconciliations have simple, common concepts and principles. AccountWise will simply explain it to you in these videos. The different types of reconciliations may vary depending on the business institution, but generally speaking, two of the most common types are 1. The bank reconciliation. 2. The accounts receivable reconciliation, and 3. Accounts payable reconciliation. A bank reconciliation can be used to compare the bank's financial records with the company's own books. An accounts receivable reconciliation can be used to make sure that invoices have been billed correctly and that payments have been received. Also, reconciling accounts payable makes sure that all debts are recorded and that all payments to suppliers are made. Reconciliation statements can be done in different formats, depending on the type of financial records being compared, the person or organization in charge of the reconciliation, and how the data can be made easier to understand. And what is the most commonly used reconciliation format? Generally, accounting reconciliations are a process used to ensure the accuracy of accounts. It is internal control that helps to detect and adjust any discrepancies between the two sets of records and to make sure that all entries in the accounts are correct, up-to-date, and properly categorized. A reconciliation can be presented in two formats. 1. A two-column format with unrecorded items in both columns to show what the most accurate and matched balances of different records should be, and 2. A one-column format that starts with presenting the balance of a data source and adding and subtracting quantitative data to make it equal to the balance of another data source record. No matter what format is used, the person doing the reconciliation should make it clear on the reconciliation statement which differences should be fixed right away in which record and which ones should be tracked to a later period. The best format for a reconciliation depends on the specific financial records being reconciled and the goals for the reconciliation. The type of reconciliation and the level of detail necessary for the reconciliation are important considerations when choosing the best format. However, some general principles can be employed when determining which format is best. For example, make sure that the format makes it easy to compare the financial records and that any differences can be found and fixed quickly. Make sure that the reconciliation allows for the verification of each financial record and that it is easy to understand and follow. Ultimately, the format should be tailored to the specific financial records and the goals of the reconciliation. In our opinion, the most common format is to compare the balances of the financial records against each other by presenting the balance or amount produced internally, then adding and subtracting the reconciled items that create the discrepancies to reach the balance of the other record. This format is the most understandable for any reviewer, but other formats may be used depending on the circumstances. The purpose of reconciliations is to make sure that an organization's financial records are correct and complete. Reconciliations show how healthy an organization's finances are by making sure that the reported values are correct and full and by ensuring the accuracy and integrity of the financial information reported by the business. In brief, most reconciliations will include a review of the financial records on both sides and the resolution of any discrepancies. They can also help to catch any discrepancies between the records of two parties, which can be important in uncovering problems or fraud. This is the orientation of AccountWise for understanding accounting reconciliations. You can take a break and recommend to our audience that they watch the next video on mastering bank reconciliation.